Welcome back to the Stock Trader Pit. Today, I've had a bunch of people ask me to do a demonstration on how my indicator will help them if they were doing zero DTEs on the SPY, the Qs, or any trade like that, the VIX, how it would perform. And so I said I would make this video. What you're going to see in this video is a replay from March 26th, which is Thursday. We all know how the story ends, but let's just see how my indicator would perform, knowing that we're looking at the SPY for the first time, let's say, with my indicator. I'm using the 5-minute chart um, in here, and so, and the time scale. And by doing that, my indicator automatically is configured to adjust all of its variables based on, excuse me, the 5-minute chart. So you don't have to come down here and say, what's my EMA length I want to use? Where do I want to take profits? What's my risk tolerance? What do I want to do if my open range breakout? What settings I want for that? The KNN, machine learning variables. All these are predefined in here. I have presets, but even better than that, if you check this box right here, as you change your time scales on your chart, all these variables will change with it relative. So you can flip-flop back through here. So a lot of the people I know that trade zero DTEs will jump between a 1, a 5, maybe even a 10-minute chart just to see what's going on, to see about going in or out so they don't overtrade. But the nice thing is you can keep changing between those time scales. Also, if you haven't watched the other videos, I'm going to spend a minute just here just describing what you're going to see on this chart. And so I just want to go down here and just double check something. So on my chart, I have um, informational blocks that will appear. And these informational blocks are going to tell you and explain what you're seeing in the chart real time. So in here, this is the forward thinking, and this is the live action. So forward thinking, it says we're in a bullish trend right now, and you'll see in a second how that's going to work. The other thing is this indicator encompasses a lot of other factors that people put on their charts. So some of them are visual and some of them aren't. So in this, the first thing I do is the system automatically, my indicator automatically draws you levels, support and resistance based on previous day's action. The other thing that you're going to see is what they call fair value gaps. That's this red. This is a bear fair value gap. There'll be a green shaded area. There'll be a bull fair value gap. And if you don't know about fair value gaps, go look it up. It's really helpful when you're trading. The other thing that you're going to see here is right now, this is a gray prediction box. This gray prediction box says right now, I'm not sure that you're trading right in the beginning, in the middle of these support and resistance zones. There's no clear direction. The market just opened on the 26th. Let's just wait. Not only that, if I would rewound back here in the previous day, um, you'll see we were in a put, and now all of a sudden, pre-market, it looks like the SPY is going up. So immediately it gave us a warning exit. You don't have to heed these and sell out, but this is saying be careful. The price action just crossed the EMA line. Let me make that bigger so you can see. The yellow line is a 9 EMA. The white or gray line is a 21 EMA. The price action crosses up. If you've been trading, you'll say, hey, that's kind of cautionary. That is this going to keep going up? And if it is, let's give me a warning. I want to preserve capital. I also have, these are live action supply and demand zones. You don't have to draw them yourself anymore. It's going to put them in there for you based on the previous trading. And so it'll let you know where supply and demand exists at whatever time scale, however stretched you make the candles. In matter of fact, if you take a look at what it did pre-market, it really respected those supply and demand zones. So I'm going to let this thing roll. I'm going to pause it every now and then. And like I said, we know the story. If you would have traded this 0 DTE, um, maybe you were profitable on how you trade with whatever indicators you're using. But with this, let's see what would happen if we just followed the indicators and played along. So I'm gonna start rolling this, and I'll stop it every now and then just to give you an idea of what's going on. Here I just see something I want to point out pretty quickly. So we had support, and the price action dropped through these support lines. Remember, they were pre-market, you had resistance, and you had support. When that price action dropped, all of a sudden what happens is those support resistance lines will turn now to resistance if the price action goes beneath those lines. And so as we're playing this out, market just opened. We got an immediate bump. It's starting to come up. It hit into the supply zone that's shown here, and we're going to probably see this come back down. Let's see. Uh, Actually, there was a call because it finally gave us, after the 15-minute ORB, hey, we're going up. But we immediately had uh, a rejection in supply, and everyone started selling off. And so you would have, I'm going to pause this because actually there is an exit symbol up here, preserving your capital. Let me scooch this over. It actually said to get out. Uh, and the reason it said to get out too at this point is this wasn't just a minor pullback. There's also underneath here is a liquidity sweep. This down arrow, there's an LS underneath this exit too. And that liquidity sweep is the bears driving this down. So it's like preserve your capital, take your loss, get out. I think it's going to go down. And even though the next candle is green, I'm still confident it's going down. My prediction box says it's going down. So let's play this out, see what happens. Remember, we got support zones, we got resistance zones, we got our prediction box, and let's see what happens. Down here, again, the range oscillator is somebody else's, Zeomans. Hats off, great job. I like this. And the volume, again, is another indicator you can add to your charts and keep track of it. You don't necessarily need that, but it's there if you do. Um, I'm going to pause this for a second. Let me just show you something that just appeared. So we got into a put here at 652. There was a take profit indicator right in here at 650. On the 5-minute chart, that's a $2 drop, and we hit into the demand zone, which would have warranted why that appeared. And so it's just warning you, if you bought 10 contracts, maybe get out, sell 5, make some profit, and ride the rest. Um, you don't have to do anything that these labels tell you. It's not an automatic trading system. It's just a guide. So, this is just trying to decipher what the charts are doing and help you out trade smarter. So we would have maybe potentially sold some. So here's our take profit indicator. And you can see if I expand this chart, my 9 EMA is below my 21 EMA. Interesting enough, we had another liquidity sweep by the bulls, which failed, and the bears drove the price back down. And there was actually an add button. It hit pause, so sometimes these labels disappear. In real time, it would be there. But that you saw that add symbol. That's a confidence in my mind that, hey, this is still intact. I mean, we've got our prediction box. It's saying still going down. I mean, we're still at um, uh, the price is 649. My prediction box says we're still going to 647. Um, we still are in a bearish trend, and the thing's still developing, but it gave us an add if you wanted to add more contracts back in. We're pretty confident it's going down. Also, you can see here that fair value gap was formed. Do you see how the bottom of these candles, where my cursor is, they line up with the top of that fair value gap. And then on the opposite side of this big candle, we have a wick on the top. And that's what formed that fair value gap. There was a big jump in price and it skipped over. So now what's going to happen is it's going to try to retest that fair value gap. And this is, again, not only because I built it, but I did a lot of research on this, is that if that fair value gap holds, and you look, all these candles, these 5-minute candles are trying to punch through that, and they're not. And if it rejects off of this, we're still going down. And that's what that's telling me. So let's just keep playing this and see what happens. And there's our take profit again, because we just got into a demand zone, and potentially this could have taken off. I mean, you don't know. Um, you might have taken profit there. I personally, knowing that my EMAs are pretty strong guidance, I'm going to ride that up until it breaks through. Um, but I put that in there to be conservative, in that if you notice the oscillator's changing, we've got some buyers stepping in. The candles are this action here is larger than that one, and you got buyers. And who knows? This could have just taken off, right? You don't know, because it could bounce off the demand and go back up to supply. So I gave you a warning, and we're going to keep going down, but it's still intact. We're still bearish. Again, we hit that. How nice is this? The EMAs are still trending down. We just blew through our demand box. There's going to be another demand that's going to appear. I'll pause this and let it catch up, because of the replay, there's a little delay. In the actual, it will it will present itself. So now you can see here, liquidity sweep again. The bulls are trying to drive this price up, and it hit down in here, hit into the equilibrium of this demand zone. They drove it up, and the bears said, we're not going to have any of that. And again, we're going to drive this price back down. My prediction box says it's going down. The EMAs are running in parallel, and we're just making money now. Now we got into this trade at 652. If you were on the 5-minute chart, we're down to 647. In a contract world, again, you're doing pretty good if you're doing an option. Um, so you can see here, we said again, maybe take some profit, because you never know. But if you decide to stay in, because we're pretty stretched from the EMA, uh, we, all my other indicators are still saying it's going down, but this is a change of character. So I built in that too into my technology. So this is saying you never know. This could go back up. We don't know. I mean, remember, we know the story because we watched the movie already, right? But in this case, um, let's assume this is real time, and you're getting a little nervous, right? Is there going to be a tweet that's going to drive this? As oil price is going to change? And I mean, this market's ready to recoil. So you never know. But let's keep playing this out. And you can see now we have new resistance. We've dropped through every support level pre-market that we'd established, and this is just keeps going down. So we now have new resistance. You have a fair value gap. We have my prediction box. Everything still says it's going down. So let's just see what happens. Well, it worked off the fair value gap. How nice was that? And we're still driving down. And actually, there was an add sign back in here when it respected that 9 EMA. You could have added to your position and had another $2 move. That was nice to the downside. So if you would have added, it would have worked out in your favor. Let me shift this over and let's keep playing this along. Again, it was a bad day, right? One of the worst days for the SPY. So it's pretty evident that this is an easy chart to read. But you had price movement here that went from 646.61 to 647.60, $1 move. Some guys are trading the 1-minute chart, might have gotten out, right? They've been in and out. I can show you the 1-minute chart in another video for the same time, and you'll see it'll be very different. Actually, let me just do this for you. I'll just change to the 1-minute chart just to show you how many trades might have occurred if you were following my 1-minute chart. If you want to trade in, out all day, keep scalping, uh, go nuts, right? You would have taken a put here, take profit there, liquidity sweeps, take a put, take profit. Um, What else we got? Take a put, take profit, right? Liquidity sweep happen, put, profit. So every time there's a change, you could have traded that. I'm going to go back to the 5 minute because this is the game we're playing now. And so again, when I trade, I typically will split these charts. I'll have a 1 minute chart on the left and a 5 minute chart here, and I can watch them simultaneously move. And I don't have to keep flipping back and forth. A little pro tip if you want to do that. But let's just keep going. So remember, we entered this trade 6:52. Where are we right now? Um, and we just got into the evening, right? This blue shaded area is the end of the day. So yeah, 1600. So we went, what, $10? No, $8 on a contract. And we didn't have to trade a lot in and out. It protected us of getting nervous every time these were pulling back or bouncing off demand. You didn't have to get out. There was no gray exit signal like here, an RO flip or an EMA protect. You didn't have that. You could just rode this thing right down all day long and, you know, had been able to step away and breathe a bit, right? So now we're into the evening. Um, I have, if you get a 0 day, you're probably getting out somewhere in here. Um, as it's getting down to the demand, you can't risk it and you want to get out. Some people, believe getting out at 2 in the afternoon is enough because theta will crush you. But I was confident and I rode this thing right down. Now we went into the evening. You're not going to get any labels in evening trading. I restrict those because I don't want to be swayed for the morning. So I'm going to let this go. As a matter of fact, I might even speed this up to get us through the evening. So we're going to jump forward. My indicator requires you to have after hours, extended hours enabled on your chart. Otherwise, the calculations get wonky because there's just too many candles going back. It knows how to separate extended hours. So if you get any kind of calculation errors, it's probably because you don't have extended hours enabled. But anyway, let me get to the next morning. My chart, my extended hours, I have blue up until midnight. I have gold past midnight. And so this is the AM. And we're getting into our morning here. So I'm going to keep it going fast. And we're going to get going here. Okay, so now we're into the morning. And what's going to happen here is, again, the replay is catching up with the algorithms are going to recalculate. But there you go. There's your morning. You got these support and resistance haven't developed yet. Let's go a little further and you'll get those. Whoops, too fast. So now we've got new support, new resistance for the day. Um, as we got in, if you were to been not in a zero DTE, there was an add symbol. You just saw that there in that it's still going down. So you could have added to your position if you bought like a 3 day contract into Friday or a 2 day contract into Friday. Maybe you did Friday expiration instead of just a zero DTE. Um, so if you were still in the trade, it would have said add some more confidence. Now this is um, the 27th, which is Friday, I believe, right? 27th is Friday. Um, yeah, the 27th is Friday, right? So this is Friday. And again, you know the story, we know what happened. But here, if you would have entered into a new trade right here on Friday, which there'll be a symbol, I'm in the 5 minute, there'll be a symbol here shortly. Um, but it's dance. The price is dance between supply and demand. It's saying just be careful. There's no edge. Stay patient. I know a lot of people want to jump in. As soon as the market opens and they see that initial candle drop or jump, or they want to wait till the open range breakout to see where the range is. Here's the range. So you're in that range. So be careful is what it's saying. Not only that, but the 9 EMA here is below the 21 EMA. So there might be some confidence. You might say, I'm jumping in even without an indicator. That's fine. That's up to you. I'm still waiting because it could have bounced off this demand and gone up. We don't know. So here we're going to go forward. This is Friday. We're at a price action of about $640. I'm actually saying and predicting it's going down to 638. And let's just see what happens. So we're at 638. Should have some labels appearing here. Well, maybe it's not. Liquidity sweep hit, driving the price back up. We were close to the demand zone, and let me just pause. There should be some labels. Oh, probably not a put label because we're going up. That's probably why it's holding off. So we just had an RO flip, meaning the rate. If you were in a trade, the price just went over the. If you were in a put, the range oscillator is warning you the price just crossed over. And you can see here it was red. Now it's moving up to green. Be careful. And oh, there's our put symbol. So we got in at 639.98. Let's see how the day plays out. There was a slight take profit because of a liquidity sweep. We were afraid it hit demand at that time. My EMAs were in parallel. I would have stayed in. Not that I don't trust my labels, but I also don't trust the market. But I had enough other things that were telling me we're still bearish. So now it's telling me to add to my position. 639.98 we got in. We're at 635 prediction level. We're at 636, and we're still going to keep riding this down. I'm not trading in and out of this. I'm holding it. I'm holding it because, one, I trust my indicator, but two, I see enough other things that are going on that are giving me confidence here. The EMAs aren't getting closer to each other, not crossing over each other. The volume is here. The market, look, just watch the news. It didn't look good on Friday. Nothing new was happening. Trump's sending more military over. The Marines are going to be over in Iran soon. Iran isn't really playing nice. As a news channel you watch. But anyway, so look at the bulls here trying to drive this up. Liquidity sweep, liquidity sweep, liquidity sweep. The bears say, I'm not going to have any of it. We're just going to keep pushing this price down, and we're into the evening. So we just took on Friday 639.98. If you were patient, and this was in a channel, you could have day traded that in out, in out, in out, made money. That's fine. I'm trying to be more conservative here, and so 639.98 down to 633.55. Not a bad move for one day in contract world. So hopefully that is helpful, showing you how my tool works. It takes a lot of the guesswork out of, you look at a chart and you see candles doing something. I look at that same chart and go, I see cup and handle, I see this, I see that. I see a head and shoulders. Everyone looks at charts differently, but this is really based on numbers, and we're trading against algorithms. And so this is my way of trying to compete with institutions. So hopefully this helps you out. We're into the weekend. Let's hope we have a green Monday and good things happen and our portfolios come back. But uh, this could have been a 5Xer for somebody just by following my indicator. So again, hopefully this helped you out. I look forward to making more videos and showing you what's going on. Uh, Hit that like button, hit the subscribe. I'll show you more stuff. In the feedback and comments, put your ticker. Let me know what you want me to run an analysis on, and I'll put it through. Now, granted, it won't be forward thinking. You'll have to get your own indicator and try it for yourself, but I'll show you what would have happened in a previous day. You can compare that to your trading and see how this might have helped either uh, with your decision making, your preserving of capital, if the price were to switch, um, or just taught you more about the charts that you didn't already know. But anyway, take care. Watch for more videos. I am going to be doing a lot of videos. I'm going to build this channel up. I want to build up our user base. I've got a bunch of users that we've been using this for months and doing a lot of back testing. If there's something you don't like, let me know. If it makes sense, I'll make the adjustment in the algorithm and we'll all benefit from that. So again, look forward to it. Subscribe, like, try this out. Take care.